This is our Forex blog for August 17th, 2011, and this is going to be one of the best Forex blogs we have because we have released a new tool that allows people to create their own color strip underneath here using all of our, or I won't say all, but most of our best statistical trend tools, and it only works in real time. As you can see, I added it right around 6 before I left office yesterday, and it kept it up to date. You can assign a different weight to different time frame tools. In other words, I have 10% weighting to the 15-minute trend candles. We compare the yen to every other pair, and what on all those 15-minute bars are they trending up or down using trend candle code. Trend candles tend to keep you in trends longer than just looking at the red and green on the regular candles. And so I have 10% on the 15-minute bar, 10% on the 30. The power index shows the percentage of currencies trending up or down. In this case, on the 15-minute bar's 20-period average, that gets 20% weight. And I gave 10% weight to the longer-term hourly moving average. So if the vast majority of dollar pairs are underneath their hourly, but short-term strength gets strong, it's going to show a lesser strength because of the longer-term trend is so weak. 3x3 power index is really good. It uses 15-minute bars. The 3-period moving average shifted 3 to the right. And so it's both fast, and it also tends to keep you in trends. If they continue for 5 hours, it keeps you in them. If they reverse, within 10 to 20 minutes, it also does a really good job of finding reversal. So that gets 10% weight, or 20% weight. And you'll be able to set this to whatever weights in settings that you want. And that's why it's called Build a Trend Color Strip. You can create, whatever one you want. I have 4 extra spaces here that I can add to it over time. Now, probably will release it without these in there right now. And then the 3-line break. If a price makes 3 closing highs that breaks, the 3-line break downtrend, it flips to up. And so it basically has to make a higher swing high or lower swing low to flip. And that's why I like this. I use 5-minute bars and 30-minute bars. And 5-minute might seem fast, but if you get a big 30 pip move up, the price is going to have to come down underneath that 30 pip to flip to down, even on a 5-minute bar. So it could take 3 hours for it to flip. 5 is not really that long of a time frame for the 3-line break. And I give 20% weighting to 30-minute bars, which might take 3 to 4 hours to flip from up to down and vice versa. So that's the settings that I chose, and I'm sure that I will come up with better settings that are both faster and give less whipsaws, or help you find more trades. And also, hopefully our users will try hundreds if not thousands of combinations, and over time will enhance these. So that shows up underneath the real-time trend. So in the past, we're always looking to buy the strongest pairs versus the weakest, and I removed the daily, weekly, monthly trend just to try to simplify today's class. I'm going to add that back eventually. But basically, if you see real-time weakness and the intermediate time frame trend, which is not quite a daily trend, it's 50 times faster than a weekly trend. If you see real-time weakness, and this is red, you want to short it against one that's both strong in real time and the intermediate time frame trend strong. So you can see it wasn't the yen at 12.25. It might have been the euro, because that was strong a little bit before midnight. You had a little bit of weakness here, but the intermediate time frame trend was up, so you're looking for some strength to come in, and that had mild strength right here. It probably would have been the Australian. The Australian had incredible strength even before midnight, and the intermediate time frame trend is extremely strong. And it wouldn't have been the New Zealand at that time, because the longer intermediate time frame trend was down. But it had just shifted down. So that's one thing that I've already learned from this tool by trading with it this morning. If you have incredible dark extreme strength and then it flips to down because of a big move down, it's very possible that it can flip back to green. But if it's been red for hours, then you don't usually expect that. So having this go extremely strong green right here, it was only weak for about a half an hour. It's very safe to assume that this is going to flip back up to green, and it did. So basically the highest odds trade was to look at buying the strong Australian on both time frames versus the weak dollar. So here it is, coming up to midnight. Price had just gone from underneath above the hourly, and this was just a false breakout, so And you can see at midnight here it broke out, and it didn't go up that much. It went up from 72 all the way up to 98. 26 pips. I think most of you would be pretty happy with a 26 pip move, and it was very obvious to look for this currency at that time. It went right to my Fibonacci area, so you knew ahead of time this was high resistance, and when it couldn't break through it, you should get out. And it pulled back, found support again at this Fib area, went back above the hourly. You might want to really wait for a breakout over this major resistance area. So you might have got in here, previous day's high is right here, and it found resistance, pulled back, didn't go back underneath the hourly. As soon as it went back up again, this is a trade that you really got rich on. It went from 95 all the way up to 49. It's a 50 pip move. So looking at the currency meter, you can see that the Australian was strong for that brief amount of time, and then it had a little bit of weakness. You might have went into it at 2 here and might have had a loss. And then at 325, the Australian got strong again. Keep in mind that the extreme strength is right here, and it just flipped down. It's very likely to flip back up. So if you see extreme strength right after a very short half-hour time frame weakness, you can kind of ignore it. That's the way I'm trading it. But let's look for some other trades today. For example, a little bit before 8, we have incredible strength in the pound. It was weak for hours, but it then flipped up. This is enough of a trend up here right before at 7:55 that you can be looking to trade this. The dollar was weak at that time, so you could now notice after the fact, once you're in that trade, the dollar's strength started to come back, unfortunately. So if you had bought the pound dollar coming up around 8, very likely wouldn't have led to too much profit. But let's look at it. Here is the chart, and you can see it went from underneath above the hourly, and you have major resistance here, and it broke out right around 8. It went from, I'll round up, it says 79 here, 80, all the way up to 30. That's a 50 pip move. So again, 50 pips, not too shabby, and you can see the dollar strength came back, and that helped, pull back the pound. Right? Now once the dollar went back to weakness here at 9, the pounds, here's the pound, at 9 again the strength came back, and from 9 onward, that was a no-brainer trade. All the time frame trends lined up. Here's 9 o'clock after the pullback, and it's a beautiful little, once a resistance area gets broken, it tends to become support on the way down. Anytime you have a test like this that holds, there's obviously buyers here. When it breaks out, you go back long again, and you might want to draw your fibs on this last wave up to get an idea of where to get out. And notice the fib target stalled, hit the second one, it really never went above there. It's also my second fib target from the night before. So that the first trade, 40 or 50 pips. Second trade, let's say it went from 90 and you got out of it right here, another 70 pips. So you made over 100 pips in the pound dollar using, the much enhanced methods. Now let's look at the Swiss. It was weak for a while. Then at 3 o'clock right here, the intermediate time frame trend shifted up. You can see that this was the strongest one right here at 3. So let's find a weak one at 3 to trade it against. It's pretty much a no-brainer. Before, you might have looked to buy this, but the intermediate time frame trend was down, so you might have had a loss or a small 5 to 10 pip. I'm trying to help you guys find, the highest odds of catching a 20 to 100 pip move, and that's the whole purpose of this tool. So at 3 o'clock right here, it shifted back to a downtrend for about 30 minutes later, and then that dissipated out, and it's safe to assume that the strongest currency, when the strength comes back, you want to look for buys again. So you might or might not have made money in the Swiss in the first half hour, but very sure, I can almost bet my life that from 4 to 4:30 here on that move, you made good money. Now let's trade it against the highest odds weak one. The euro has a downtrend right here, but in the real time it's showing some strength, so you wouldn't use that one. And there might not be a perfect trade at this point, so again, let's scroll this over to that time when it's shifted up, and we can see that the New Zealand is weak and weak, the Australian is weak and weak. I want to find the weakest one. The euro is weak and weak. So let's look at 3 currencies. We're going to do Euro Swiss buys. I'm sorry, Euro Swiss sells, weak euro, strong Swiss, at coming up to 3 o'clock. Obviously this has to be a news release here. At 3 o'clock is right here, and you can see that there, I don't think anybody, including myself, would have taken this trade because it's already fallen hundreds of pips. But you can see it fell another 70, and then it had a decent pullback and it went down again. That's not the perfect example. Let's look at, well, it did work, but I don't think we would have, taken that trade. It's a risky trade. I would not have taken it. I hope you guys wouldn't either, because most of the time that would be a loser. All right, well, this is the same thing. The Swiss made such a big move that it flipped its, extreme downtrend into an uptrend because of a news release, obviously. So it's probably not the best example of the day. So I'll find another one. Most of us aren't going to buy or sell after currency's already moved 50 to 200 pips. That's not a high odds trade. But once it moves that way and you have a little bit of weakness, if this stays strong and you see some more strength come in, right here at 555 going on 6, you might look for a trade in this against a weak one. Now the euro is no longer weak at that time. The pound is showing some weakness. The dollar and the the dollar was one of the most consistently weak. So as soon as the dollar shows some signs of weakness, as long as the Swiss is strong, you might want to sell the dollar Swiss. So now the dollar is weak, but the Swiss doesn't have that strength anymore. So, unfortunately you don't have a trade, but you also don't have a loss. Let's scroll back a little forward in time and try to find those that line up at various times. The CAD shifted weak right here at 8. What was one of the strongest ones at 8? Pretty clear, the pound. Pound CAD, let's shift this back and we'll see all the different trades at 8. We want to buy the pound CAD because all the time frames line up. We want to buy the pound yen because all the time frames pretty much line up, and this doesn't have that much strength. And also the pound dollar is a no-brainer at 8. We already, I believe, showed the pound dollar at 8. Here's 8 o'clock. Well, see, the dollar was already weak for an hour before that, so this has already gone up to a rubber band. You waited for the pullback and got that one. Let's look at the pound CAD at 8. Hopefully this one didn't already shoot up too much. Okay, here's 8 o'clock. This one made a nice little boost up. This is one of the currencies you're looking at. It went from above the hourly to below it. I'm sorry, below it to above it. It's kind of chopping around here. A lot of times currencies chop around at the hourly because there's a fight between people that expect a breakout and people that are selling the previous trend. Once it breaks out of that area, typically you get strong trends like this. So from 9:30 to 12, very likely the pound continued its strength. As you can see, it did. And the CAD continued its weakness. So even if when you started watching this at 8, there was about 15 minutes of strength in the CAD here. When it goes back to red at 9:20, and when the pound is green at 9:20, all the trends line up in your favor. And let's look at this chart at 9:20. Here's that bar right here. You had plenty of time to get into this trade, and you can see it went up 100 pips. Now most of us aren't going to follow this all the way up 100 pips. However, if you put our FX and telestop on there, very likely this caught at least half of that move. Actually, I'm wrong. It caught the whole move. You're still in this trade. So you did make almost 100 pips in this trade. So this is a new enhancement that we're releasing today. The FX Trend Pro is, without a doubt, our best statistical trend tool. The only drawback of it, it's very fast. It looks at the trends on a bar-by-bar basis. Sometimes trends last for 5 to 15 minutes, and other times, 30 minutes to 3 or 4 hours. So focus on the currencies when they have real-time trend strength, when it matches what the intermediate time frame trend strength is. And keep in mind that you can create this tool using any settings you want. You can use faster settings to have this flip colors quicker, or you can even use longer term settings. I have maybe 50 to 60% weight on things that can change the trend in 20 minutes to an hour and a half, and 40% weight for things that might take an hour to 3 hours to time the trend. So if there's tremendous longer term weakness, then short term strength is not going to affect us that much. If there's just mild longer term weakness and incredible short term strength, it's going to flip it to green very fast. So it's in my opinion, this is my first draft of the settings here, and I'll be able to change my settings very easily. And when you guys have this later today, you can hopefully try out a dozen different settings on your charts and see which ones you like the best, and keep notes yourself, and please share it with me, and I'll release. I'm sure this isn't going to be what we're going to use in a week or two, and certainly not a month or two, but it really helps you avoid losses. Here at 9, you can see the Swiss. It was strong, lost its strength, had some weakness here, had strength, weakness, strength. When it went weak again here at 9, what was the strongest one? The pound. Pound Swiss also would have been a no-brainer after 9. I'm not sure if I already showed this. Here's 9, right? You have 30 minutes to bring this chart up, because you're already aware that the pound has gone strong and the Swiss is weak at 9, and that's right here. And you might not want to buy it right in front of the hourly moving average. You might not want to even buy it when it broke above the hourly. But when it goes here 20 minutes above the hourly and doesn't go back underneath it, you definitely want to buy this. And you can see it went up 150 pips. So I'll end class with a beautiful textbook perfect 150 pip move. It's now Christmas time again. I will see you guys in the live trading room tomorrow, and let's make a lot of money.